Welcome to TradeTheMBI.com. This is John. This report is for the 12th of October, and of course, that rally continues in the face of some difficult times, but nothing over the top has happened just yet. So, pain trade, as you might call it, even though I wouldn't call this much pain, is just basically a retracement of the decline back towards that 50%, which is what we were looking for. And you can see now we have magenta strong over red as well as MBI white, and that configuration is solid. However, look at the last time we peaked at these levels. Now, doesn't mean that you're going to get the exact repeat, because you can, like over here in June, just trade straight across and continue that rally. But what we'll be looking for is a transition here in the DOC, fading short-term buyers in steel. And if shorts maintain the lead and orange DOC continues to rise, could have a little bit of pressure go on there. I wouldn't expect anything hyper dramatic. Of course, we do have CPI numbers in that coming, and that could be enough to elevate the market if they're modest. If they're elevated, I think it puts pressure, because then it says the Fed, even though they're providing liquidity right now, given the crisis situation, they may not continue to do so if that becomes a real inflation situation. Though, as I've said, they're not all that interested in killing inflation. They want to keep it accelerated past where rates are, simply to reduce liquidity in the system. And I think that's been ongoing for a while now. And MBI readings from NASDAQ looking identical, but much stronger. You can see that everything's, so the push has been to move towards tech. And obviously, I think you're going to see gold in that catch it. You can see the retrace from Treasuries, so the yield softening quite a bit in that liquidity push. I thought it had gotten a bit out of control anyway. They were way ahead of where the Fed was, and given the crisis, I think that's eased off pressure for the Fed to push even more. So that stability, along with a little bit of softening from oils, all it's done is just retrace the positive extreme. Nothing hyper dramatic, but it's only going to take one incident for that to explode to the north, and it's already way elevated from where it should be. That helps the euro. And not a surprise. And then also just the fact of softening from rates should also help improve the euro. So that's a breather for central banks not having to intervene there to keep things going. And the slow creep of gold, of course, is fine. It's rising, but this is still way overdone given what we've been seeing. And it's interesting because it ties into what we saw in cryptos, just not catching any steam whatsoever. From Bitcoin, as well as ETH even suffering significantly more. And any drawdown within the markets, then you can see new lows in each of these. So certainly not a great situation. So we can see how that press is gone, little ABC moves and doing it again. We did have the white MBI push right here, and that should have gone down to 50%. So the fact that it caught up there meant there was a significant amount of buying going on in between there, and that's really pushed it. And of course, you have cyan under red, which is always within the buy category. So nothing there. However, yes, it is important to note all positive extremes from there. The earlier ones already got filled when we retraced right at the beginning of this move. So all that's pretty clean. That means there's nothing that's really keeping things from going. And what we saw from the early market was selling, clearing out any weak hands and stops, and then just straight up for the rest of the day. And in the post market, none of those gains are really being tested at all. We're on the bottom side of the peak, but you can see there's a lot of positive extremes to fill back. Even if we go back to the original breakout move down at the 43.96, but the real primary one would be at just about 4,400 range. So that's your downside potential on it. But overall, I think that I'm probably going to see more of that upside push, simply because it goes against where the overall trend of things are. And that's always the difficult one, because markets tend to press higher when there's difficulties out there, but nothing quite catastrophic until there's actual something that materially changes the reality. I think that you're still in that upward push. As always, though, continue to update you on the Skype chat. Trade well. Have a good one.